afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The Fed did it. They confirmed that they won't hike in 2019, and they have one hike on the dot plot going after 2020. On top of that, they said they'll finish unwinding their balance sheet in September. Overall, this was more dovish than anticipated. Fed Chair Powell continued to exude patience, data dependence, and really ultimately uncertainty on that data. So we saw the dollar trade lower. We saw treasuries go higher. That means the yields were falling out of bed. New lows in some of the yields. We're seeing currencies against the dollar gain ground, most specifically the euro and the yen. The euro traded out above major three-star resistance, the level that we had on the FX Rundown report last night. It's out above some of our key levels, and really this move lays the groundwork to about 115.80, 116 area. The dollar index to the downside is now below its support, the 50-day moving average, a big retracement level, and it could and should open the door down to 94.5 on this move. Now, this is the week is really still developing. There's a lot going on tomorrow. The Swiss bank, they meet in the morning. They're not expected to do anything. The Bank of England meets. They're, of course, not expected to do anything with Brexit in shambles. And speaking of Brexit, Theresa May is speaking right now. So there's a lot going on. The British pound was really the only currency that didn't gain ground against the U.S. dollar. So keep an eye on that. You could see some more weakness as uncertainty persists with the Brexit. But there's a lot of volatility in that currency that you got to be careful. You got to watch it more closely on a daily basis. Overall, though, we still think the dollar has room to go. We've been talking about this through this week, going all the way back to our tradable events this week on Sunday. An interview with Bloomberg I did on Monday, talking about looking at the euro. There is a 3-to-1 leveraged short position according to the CFD's commitment of traders, and you're going to start to see those shorts cover. And I think we started to see that today. There should be some more room to the upside. Again, 115.80 to 116. Keep an eye though on those central banks tomorrow, even if though they're not expected to do anything. Again, the Bank of England, with as well Brexit, and the Swiss bank as well. They're going to move the currency market with what they say. So keep an eye on that. Overall, though, path of least resistance higher for the euro, path of least resistance lower for the dollar. And then on the data front, we do have Philly Fed manufacturing tomorrow. This is going to be a crucial number. Remember, last Friday, New York Fed, Empire State Manufacturing missed expectations. This is a March number. We go back to ISM manufacturing for February. That also missed. So the manufacturing is really trying to echo recessionary-like conditions. It's what the Fed is worried about. Watch that number tomorrow. It's going to be crucial. Now, moving on to the yen, this is the safe haven currency. You're seeing the safe havens today push off those lows and make highs. The treasuries are trading very well. Gold has handily held 1,300 today. It's trading at about 1,315 here going into the close. And then you're seeing the yen out above that 90 level. It's been tethered to about 90, which was really helpful on that roll. We talked about it in the FX Rundown report. The roll from March to June was very helpful for the yen, moving that because that difference in the contract moved it out above that continuous 200-day moving average. Now we're up against first key resistance and actually trying to push through it here tonight. Look for that next level. It's a major 3-star resistance level. It's on our FX Rundown report from last night. Those levels are still valid. Keep an eye on that. But equity markets did reverse those early gains after the policy statement was released and finished on the lows of the session. Looking at the S&P, the Russell, the Dow, take a look at that. If these continue to sell off overnight, safe haven assets are going to get bid, most specifically the yen, which has a way to go. It's trying to move outside of a downtrend, and the dollar continues to weaken. The yen is going to capitalize very much on equity market weakness. And then lastly, looking at the Aussie and the Canadian. The Canadian did trade higher early, but it gave up those gains, and crude oil is at $60. Crude oil traded higher. A very bullish inventory report for crude oil, and the Canadian couldn't hold those gains. We saw the reversal here today, finish in the red. Ultimately, with the Canadian and the Aussie, we think the risk sentiment, a little bit of uncertainty still out there with trade, or a lot of bit of uncertainty still out there with trade, could really drag on the Aussie and the Canadian. So we think there is some downside potential there if you start to see that risk sentiment, equities overall, maybe crude oil, some of the other commodities come in just a bit. But the commodities are not showing much weakness. Copper finished on the high of the session. Again, the crude oil finished on the high of the session. Watch those equities, And even though if the dollar's weaker, it could start to drag down the Aussie and the Canadian. They are at a lot of big resistance levels. And for the Aussie, we had a slight bearish bias. It traded higher today after trading lower last night. There is an employment report coming out of Australia tonight, so keep an eye on this. There could be some opportunities here. We have to be very neutral on the Aussie and the Canadian because of the uncertainty surrounding it. However, what I'm saying is we're looking for an opportunity to be bearish if the outside landscape allows us to be. Give us a call here. We're here to talk about it and help you with any type of risk management or strategy you're looking to implement, currencies or others. 312-278-0500. You can email us at info@bluelinefutures.com. And again, that's 312-278-0500. And the email is info@bluelinefutures.com. Check our website for updates. We put them out daily. And remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.